Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 26th of August, 2021. Alright everyone, let's get right into it. So, 100,000 ETH has now been burned since EIP 1559 went live around 20 days ago. That is a lot of ETH, right? It's over $300 million worth at current prices, and a lot of this burning has been led by NFT Mania, of course, but it's just been absolutely incredible to see kind of like the speed at which this ETH has been burned. I mean, if you annualize this out, I think it works out to about 1.7 million ETH burned. Now, who knows if the kind of like, I guess, current network activity is going to keep up for at least like the next, a year or so, like year minus 20 days sort of thing. But, you know, in saying that, I think that it's just been wild to see the fact that, like, the fees are high, but people are paying them. Like, I mean, I was doing some transactions before, like NFT related ones, and the fees just, like, are so high. And, you know, I'm paying them because it's worth it, and I think that's what a lot of people are doing as well. It's worth it. I mean, it's profitable for them to do so. But yeah, it's just been crazy to kind of see this. But I did want to talk about two things in relation to this. One of them is, I guess, people coming at me a lot of the time and asking me questions about kind of like the price and why the ETH price hasn't reacted to this. You know, why it's just, I mean, it hasn't been going down exactly. I mean, it is up from when 1559 went live, but it's been like crabbing around, right? We're in like this little mini crab season where it's just like pinging between like 3k and 3.4k or whatever. And I mean, all I can say is that like it's not going to just like react immediately. I mean, I've spoken about efficient markets before and how I don't believe that markets are efficient. I believe they're incredibly inefficient. But at the end of the day, markets don't just look at kind of one factor. There's a million other things that go on. And we can even look back at history of something like a Bitcoin halvening, for example, where Bitcoin halvening is a 50% reduction in supply, and if you actually go back and look at the chart, it doesn't really seem to have like a massive effect on Bitcoin until about 6 months after the halvening goes through. So that's a quite a long period of time. But it also shows that the kind of like scarcity side is just one side of it. You need the demand side to match it. So, you know, right now, while we're in this kind of like crabbing, I guess like the demand and supply side have kind of matched with each other, because you have, I guess, like a sideways movement where, you know, you have people selling and you have people buying, and it's mainly just like bots kind of trading with each other, and some traders in and out, and people just like doing their daily activities, whether they're taking profits back to ETH and stuff like that. I mean, there's a whole lot of that kind of stuff going on there. But at the end of the day, you just kind of have to wait. You know, wait till the time kind of comes out, time passes, and over the long term, obviously, you know, all of us believe that ETH is going to go up in value. But over the short term, it's not going to react like a lot of people expected it would react. And I think on top of that, if you kind of look at the amount of ETH that will have been burned in 6 months, right? If you kind of I guess like take the annual amount, which is 1.7 million, you halve that for 6 months. If it was to take that long to play out like the Bitcoin halvenings do, which I don't believe is going to be the case. I don't think it's going to take that long to kind of play out like that. But if you kind of like take that, then it's really only the amount of ETH that will be burned here would be like 800 and something thousand, which is insane. It's an insane amount of money. It's billions of dollars worth of ETH at that point. But yeah, as I was saying, like there's so many more kind of like factors that go into markets that go into why ETH is going up or down. Like if the overall market is bearish and the trend is bearish, it doesn't really matter if there's really like good news coming out all the time. It's just going to be a thing where the price is going to go down until it gets to a point where everyone's just like, okay, well, you know, it's gone down a lot. Like everyone's kind of wrecked right now. Let's buy, because like we're sitting on these kind of like we're sitting on cash right now, and we think this is a good entry, and then basically the price goes back up and the sentiment changes overnight. I mean, you know what the funny thing is about the crypto sentiment is it doesn't just change overnight. It literally changes within like 10 minutes. Like if the price is crashing, right? Say the price has gone down like 5% in like an hour, and then all of a sudden it bounces back up by 5%. Within that kind of like hour, you have two completely different sentiments. And I've seen this play out on Twitter. It's actually so funny to watch play out, because you have the sentiment of extremely bearish while things are going down, maybe 5% in a day, which is actually for crypto, I mean, it's a normal crypto day, but still, like it's a day that, you know, you watch the charts and you see these kind of like red candles and you're like, oh my God, what's happening? And then like an hour later, if the price goes up 5% because it just bounces back up, automatically everyone's like really bullish again. And it's quite insane just how, I guess, like glued people are to their screens and glued to the charts they are. I mean, I am too. I have the charts up pretty much all the time, but like, I mean, that doesn't really affect the way I kind of like view these things. I'm obviously always playing the long-term game. And kind of like to relate that back to this, really, you can't let recency bias get the best of you in times like this. If the price is going down, even for like a month, who cares? I mean, we saw what happened when the price came off 4,400 down to 1,700, and it did that for a little while, right? We kind of crashed in May, through June, through July, and then we started going back up, and then everyone suddenly turned like super bullish again. But there were a bunch of us who remained bullish throughout and were like, this is just kind of like the way it is. This is the way crypto goes. And that was a really brutal drop as well, mind you. So, yeah, it's just been quite funny to kind of like see that play out and see people kind of say, why isn't ETH mooning immediately? It's because it's just markets are complex. There's so many other things that are going on. And there's no such thing in my mind as efficient markets. Like, especially for something like ETH that is such a multifaceted asset and there's so many kind of like misunderstandings around it too. Like, as I mentioned when 1559 went live, so many people kind of said, oh, wait, I didn't know we'd be burning this much ETH. And it's just, that was so insane to me, really. It really was, because these are not people that are just like random people in the industry. They're people that I actually see have been regularly kind of paying attention to this stuff. I know they kind of, watch the refuel or read my tweets or respond to them or whatever. And I was saying like exactly how much ETH was going to get burned based on the calculations that Justin Drake did. And, you still have people being surprised. So even if people are spending every day in the ecosystem, even if they're studying this stuff, they can still be kind of taken aback by things like this. And then the final thing I'll say on this is also that 1559 really was only like a teaser, right? We're working towards that full ultrasound money, which is basically 1559 as burning and the proof of stake issuance, which is about 90% less than the current proof of work issuance, which would reduce the have the issuance go negative. So I think it's currently about 1% or something like that, net negative a year, which, I mean, that I think is more bullish than 1559 for a number of reasons that I've gone through before. But yeah, I just wanted to kind of like give some color there and clarify things for people who may, be kind of like confused or kind of thinking, why isn't the price going up, blah, blah, blah. Revisit this. I mean, even if it takes a few months, revisit it. And then, in a few months, people will be like, oh, wow, we're going up because of 1559. It's so bullish. Look at how much ETH we're burning. But, if you wait until that happens, well, then you have to buy at a higher price. So if you have like a long-term outlook and you really don't care at the end of the day about where you buy in, you kind of DCAing in or whatever. These times, and unless you kind of like think we're going down a lot, times like this when the market's just going sideways is usually a pretty decent time to buy. But it's kind of hard, right? Because if the market is generally bearish and there's like a bearish trend, and then there's just like a sideways for a month, but then it kind of still crashes after that, you kind of feel shitty. And I've been there before plenty of times, but generally my own rule in kind of like whenever I buy into something, I don't like buying into pumps ever. Like if something's gone up a lot, I really don't like buying into that. And I know yesterday I spoke about how, you shouldn't let that kind of like dissuade you from investing in something, but I'm talking about things going up like very quickly in a short period of time. Some things can go up 10x in like a week. I really don't like buying into that sort of stuff unless there's actual like strong fundamentals backing it up. Like Axie Infinity is a perfect example of this, where there was strong fundamentals backing it up. But generally, if there's something's just done a 10 times pump for absolutely no reason, I hate jumping into that sort of stuff. That's not something I will do. Whereas, if it's just been quiet for a while and I actually see the fundamentals improving and people just aren't paying attention to it yet, well then, yeah, I'm going to jump into it. I'm going to probably place a bet there. But that's like a whole nother thing there. I'm going to leave it at that for now. But yeah, just great to see 100,000 ETH being burned. Next, I guess, milestone is what, 500,000, 1 million? We're going to get there. I guess like if you kind of like extrapolate this 20 days, times it by 5, we'll be there in 100 days at 500,000. So yeah, very much looking forward to that. All right, on to the next thing here from Danny Ryan. So he gave an update today on, I guess, ETH2 consensus layer, whatever you want to call it, in his finalized number 28 update here called the Road to Altair Edition. Now, for those of you who may not be familiar with this, I've been talking about it a bit on the Refuel lately, but Altair is the first ETH2 network upgrade, hard fork, whatever you want to call it. I mentioned that Paramount, the testnet, that is actually getting wound down soon, but that forked and, everything went nicely there, and they're currently doing testing and everything on that. The next testnet is scheduled to upgrade on September 2nd, which is Praetor, and then following that, there'll be a mainnet fork. So we may see mainnet fork being, end of September, early October sort of thing. And then, as I've said before, all eyes on the merge. Like, that is literally what everyone is going to be working on. Well, pretty much everyone. I would say some people are still going to be working on some other things within Ethereum core, but generally, most of the developers, researchers, and any other kind of like ecosystem participants are going to be working on the merge, which is super exciting, right? Like, I mean, they're already doing that, as I mentioned before. It's not like we're waiting till this kind of goes live on mainnet and then we'll work on the merge. There's already lots of work being done there. But I think maybe we're still on track for Q1 2022. I hate giving dates or like release windows generally, or kind of like, especially with Ethereum core stuff, because sometimes it can take a lot longer than we would like. And then, I mean, even layer 2 stuff has taken a lot longer than we would like. So just generally this sort of stuff, just take any dates with a grain of salt. But yeah, I mean, Q1 2022, that'd be awesome. Even if it's like the very end of Q1, like March 30th or whatever, that'd be quite funny. But yeah, Q1, Q2 for the merge. Let's hope that we can kind of stick to that. And I'm really looking forward to that. But I'm also looking forward to this. So if you're running an ETH2 validator, definitely pay attention to these updates, because there's going to be a client release from the various teams, whatever client you're running, to update to this once the mainnet fork is announced. It hasn't been announced yet. There's no date for it or whatever, but it's coming. So definitely keep an eye on the various channels, just so you can upgrade your validator and beacon node. So Justin Drake posted, I guess, like a post from ETH Research today on Twitter, where he basically said this has been an MEV research breakthrough. MEV smoothing for consensus stability, trustless MEV oracles, and potential for MEV burn beyond base fees. Now, I'm just highlighting this because some of you may be interested in it, but I read through it, and I'm going to be honest, I didn't understand most of it, because it is like way out of like what I work on. This is protocol level stuff right here, very technical stuff. But I always pay attention to things that people like Justin Drake are excited about, because Justin Drake's a core researcher. He's been working on MEV-related things. I mean, you've probably heard about him talk about this on Bankless before. But generally, yeah, if you're interested in kind of this sort of stuff, definitely go check out this blog post. I mean, I guess it's a research post. As much as I didn't really kind of like understand it, I think there's a lot of great discussion going on in here. And I think that the more discussion, more eyes on MEV that we have, the better. So yeah, definitely go check that out. So Uri from Starkware announced that StarkEx has now crossed $10 billion in cumulative trading volume across dydx and diversify, and most of the action on SoRare and Immutable, the other two apps that they have live on StarkEx, is just minting, not yet trading. So that because those are NFT platforms. And then Uri says his guess is that they'll cross $100 billion well before the end of Q1 2022. Turns out there was no need to wait for next week, which is a prediction that he gave a few days ago. I went through dydx's growth, I think, on yesterday's refill, the day before, about how, they added the token. The growth's been like pretty amazing to see on their layer 2 exchange and stuff like that. But Diversify's had a lot of great growth as well. They've got a bunch of really innovative products on there that they're adding to. So if you haven't checked out Diversify, definitely go do that. And of course, these NFT platforms are also heating up here. SoRare is pretty popular, I've heard. It is centered around football or soccer, as our Aussies call it, but I'm not a sports guy, so I haven't really followed it too closely. And Immutable, I mean, I'm going to actually talk about something that they announced today. It's a perfect segue. But Immutable has really just a couple of apps on there right now, like Gods Unchained, and I think Guild of Guardians, and maybe one other or something right now. But yeah, it's still mostly just minting and not trading. But yeah, great to see this kind of from Uri here. But also he said that StarkEx had settled 106,000 transactions on dydx over just this past day, consumed 169 million gas, which is 0.1% of the daily gas on Ethereum L1 at 1600 gas per transaction. And he's kind of like comparing this with the original L1 dydx. This would have cost 200k gas per transaction for a total of 21 billion gas, 12% of the network's daily gas. So StarkEx scales in prod 120x, which is an absolutely massive improvement, right? And to kind of like, I guess, maybe simplify it a bit, focusing on this, like 1600 gas per transaction. So for an example, when you send like an ETH transaction, it's 21,000 gas, right? So this is much cheaper than even just like a simple ETH transaction, which is the cheapest thing you can do on Ethereum. Simplest transaction you can do on Ethereum, which is absolutely amazing. And the fact that they've just been able to scale this by 120x is incredible. So yeah, I'm loving StarkEx and Starkware. They're just like no bullshit, no hype, just like, scaling Ethereum in kind of like their own way and doing a really great job of it. So yeah, really excited to see that. Now let's talk about that Immutable update that I mentioned. So Immutable have announced that the IMX public token sale will be happening on 8th of September on CoinList. So you can get the full details here. Now, unfortunately, for some reason, Australia is barred from this sale. When I click through to this link, it says your jurisdiction is not allowed. And I read the sale terms and it said, the usual United States, I guess like can't remember. I think China or something like that, and Canada was on there. But then they said like other jurisdictions, and I mean maybe they haven't updated yet, but I didn't see Australia in there. But it seems that Australia is unfortunately on the list that cannot participate, and you can't even use a VPN because CoinList has a KYC requirement and all that kind of stuff there as well. So unless you have a way to, I guess, like get someone who has an ID in another kind of part of the world that's eligible, you unfortunately won't be able to participate. I know I have a lot of Aussies that watch and listen to the Refuel, so it's unfortunate for us that we won't be able to kind of like participate in this. But at the same time, I kind of like spoke about how they're doing an airdrop to people who had Gods Unchained cards or have used Immutable X or played kind of Gods Unchained and stuff like that, of ETH instead of IMX, because they can't airdrop IMX to United States citizens. But I think that they're going to be able to airdrop IMX to Australian citizens. They didn't mention anything about that. They just said that US would be barred from it. But unfortunately, it wouldn't surprise me to see that they will also bar Australians from getting the IMX airdrop. But I don't know. I don't think that's confirmed yet or anything like that. So hopefully the Australians can still get that, and the other people as well, like Canadians and any other restricted jurisdictions, of course. But yeah, unfortunate to kind of like see that there. But, you know, I mean, this is just like, I guess their token might, you know, I don't think their token's going live on 8th of September. This is just a token sale. Not sure exactly when the token's going live. Maybe it's in kind of like the details here. But for those of you who don't know, Immutable X is an L2 platform for NFTs. I've talked about them a lot on the Refuel before. But I guess like cool that they're doing this sale. And if you can participate, definitely go check it out. And, you know, it'll be on CoinList. I think there are also sale limits on CoinList and stuff like that as well to try and make it fair. These sales are always kind of like a bit iffy, if I'm being honest, just because of the fact that they've put limits on things, you know. Then they open it up and whales just gobble it up if there's kind of like enough, I guess, like enough kind of a space left and stuff like that. And CoinList can be very, I guess, unstable during these sales. I've participated in a couple of these sales myself, and definitely the experience is far from desirable because everyone's trying to get in, and their queue system hasn't really worked too well in the past. But yeah, generally, I guess just like if you're interested in this, definitely go check it out anyway. But I would love to see kind of like better models in the future, maybe, of these kinds of things. But it's hard because there's no perfect model when it comes to token sales. And yeah, just like definitely go check this out if you want to. It'll be linked in the YouTube description. So Loopring has crossed $2 billion in trading volume on their L2. So this has been a great kind of ascent for Loopring here. They've been doing a lot of great work. I spoke about them yesterday, about how they're going to be supporting NFTs on their L2 platform. And the interesting thing about Loopring, and I think I've discussed this before, but basically they're kind of like their own little ecosystem as an L2, right? They're not sharing their L2 with other kind of apps or anything like that. They're not a generalized L2, but they're their own little ecosystem, and they're just like making their, I guess, like their Loopring specific L2 as powerful as it can be. And if you've traded on there, you'll know what I mean. It's a very smooth experience. The deposit withdrawal experience is great. It's not just the exchange, it's also the payments infrastructure they have set up, the smart wallet, all that sort of stuff. So yeah, it's just great to see their continued growth here. I mean, $2 billion in trading volume is nothing to scoff at. Obviously, L2s have quite a little while to go before they match L1 trading volumes. Even Uniswap on Optimism is only doing, I think, $4 or $5 million last time I checked of 24-hour volume on a good day, whereas Uniswap on L1 is doing like $1 billion every 24 hours. So it's a quite a big difference there. But that's network effects for you at the end of the day. And, you know, the same network effects that keep that kind of like work against, I guess, like Ethereum killers are going to work against L2s for a little bit. But I think the harmonization becomes that L2s are something that we want to push users towards. We don't want to push them towards the Ethereum killers, obviously. So over time, I expect that to kind of like balloon up. But also Optimism and even Arbitrum, they're just like rolling out slowly. They have guarded launches. They're not trying to, I guess, like scale to thousands of transactions per second from the get-go, because they would actually have a lot of empty blocks as well, or a lot of ghost blocks, because there's not just that kind of demand yet. I mean, if you look at how much even something like the Polygon POS chain is doing as a benchmark here, they're doing about 90 transactions per second. And if you look at Optimism, I think it's like 1 transaction per second on average. So really, until these platforms actually have like demand for the sky-high scalability, I think it's okay that they have guardrails on and they're kind of like taking it slow. And at the end of the day, if you give people kind of like more scalability, they're going to eat it up. But a lot of it gets eaten up with spam transactions too. And that's why you need fees. I mean, all these chains offering kind of like sub-cent fees, I just don't see that being sustainable or lasting forever, because the chains are just going to be hit with spam attacks eventually, right? Like just, I mean, not just like an attack, but just spam in general. People just doing things that are ridiculous. I mean, this happens on layer 1 Ethereum as well, and people pay the fees to do it, and that ETH gets burnt. So that's all well and good, but generally it doesn't last very long. You know, if you have a chain that can do tens of thousands of transactions per second. This applies to L2s as well. Don't get me wrong. This isn't just like the Ethereum killers. This is L2s. Then what ends up happening is that if the transaction fees are sub-cent, you do have that spam problem. So, you know, it's a kind of a balancing act there, but still great to kind of like see, I guess, like Loopring's growth here. And I'm looking forward to seeing kind of like what obviously Optimism and Arbitrum do as they kind of continue to scale out and towards the end of the year. So I spoke about the EGL drama the other day, you know, that kind of like token that was used, well, I guess like that the project was trying to force into the ecosystem to be used to vote up or down on the gas limit as kind of like some pseudo on-chain governance. Well, unfortunately, the Erigon team got embroiled in all that drama pretty heavily, and Alexey Sharp, the, I guess like lead of the Erigon team here, and for those who don't know, Erigon is an Ethereum 1 client, he put out this thread basically saying he's going to get off Twitter for a few days because it started to affect his mental state because of all the kind of like drama that's been going on with kind of like the Erigon team, EGL in general, and like Geth and all that sort of stuff. You can read his thread; it'll be linked in the YouTube description. But what I wanted to focus on was this kind of like thing, his mental state with this sort of stuff. On Twitter, I mean, there's a lot of, and I'm not going to say I don't contribute to this, but there's a lot of like toxicity that goes on Twitter. There's a lot of joking that goes around, and some of it can like be very hard to translate, especially because there's a lot of people who from other countries where English isn't their first language. So sarcasm normally gets lost, and people may feel like they're being attacked. People who aren't used to being in the public eye definitely would feel like they're getting attacked. And I think Alexey definitely falls into that bucket, as he's a core developer. He doesn't really spend much time on Twitter. He spends time building, right? Whereas someone like me who spends all the time on Twitter, I definitely kind of developed a very thick skin for it, and I can just like laugh it off. But there's a lot of people out there who you know, are very deeply affected by this sort of stuff. And you know, as I said, I know that sometimes I contribute to this sort of stuff. Like I make fun of Cardano all the time, whatever. I mean, for me, that's just like the way I am. It's like my banter, my Australian humor. I don't mean to like be, you know, an asshole or toxic about it. And really these days, I'm just blocking all the idiots who come at me as well with like, oh, you know, Ethereum's going to die, blah, blah, blah. Okay, goodbye. On the block list you go. But generally, I think what I wanted to just advise here is that if you see people who may not be very active on Twitter getting attacked or like having to deal with toxicity or kind of like, I mean, tweeting out things that may be weird and maybe kind of like unlike them, if you know them, reach out to them. Or even if you don't, you can just reach out to them and DM them and say, hey, like I really appreciate your work. Don't worry about like all this stuff that's coming at you on Twitter. It's just noise. And people really appreciate that, because that's what happened with me when I went through some drama last year. I had a lot of people reach out to me and say, hey, I got your back, you know, just ignore this noise. Maybe take a break for a few days. It'll blow over. Because it does. I mean, crypto Twitter's memory is like shorter than a goldfish. But yeah, I just like a little tip there. Just reach out to people, because a lot of these people who aren't used to the public eye just don't know how to deal with it. And that's not their fault. They're just not used to kind of like this attention. And really, I think social media in general kind of like, I mean, it's pretty bad when you have like a lot of people kind of like coming after you, because you can feel like you're stuck in a room that's just getting smaller and smaller, and you have all these people coming at you with all these comments, and it makes you just feel really, really shit. So yeah, if you know people that, and you see this happening on Twitter and you know the person, and even if you don't know the person, just simple DM. They may not see it, they may see it. I mean, even not just a DM, you can reply to their tweets and basically say, hey man, I got your back, like ignore the trolls, ignore the haters and all that sort of stuff. And they appreciate that, because I mean, I know I've spoken to some of them. They really, really appreciate that. So yeah, I just wanted to call out that there. But if you want to get kind of like a bit of background on what happened with Erigon, EGL and all that sort of stuff here, you can read Alexey's thread. I'll link it in the YouTube description and you can go check it out there. Some super exciting news out of HopProtocol today. They are now supporting Optimism. So you can basically go and transfer assets in and out of Optimism within minutes. Pete Kim here put out a kind of like screenshot of the interface where you can send USDC from Optimism to Polygon. And now these are really, really fast transactions, like within minutes. You know, I've spoken about how optimistic rollups have the main drawback of that kind of like 7-day withdrawal period. And you know, that people were like, oh, well, this is like massive turnoff. This is like a buzz. This is like something that would kill Optimism or Arbitrum or whatever. This is kind of like a deal breaker. But I know I've been talking about these bridges like Hop and Connects and all that sort of stuff that were coming, and now they're here. I mean, Hop's here. It supports Optimism, as you can see. Go from Optimism with USDC to Polygon. You can go to Ethereum, all that sort of stuff within minutes instead of having to wait that 7-day withdrawal period. So this is absolutely awesome. More and more assets are going to be added over time. And for those of you who may be wondering how this works and how HopProtocol can enable, instant kind of withdrawals within minutes. It's basically they have like these liquidity providers that sit in between, I guess, like Optimism and Polygon, for example, and take on that kind of like 7-day withdrawal period for you, because they know that in 7 days they're going to get those assets. So essentially it's like an IOU to them, but it's cryptographically guaranteed that they're going to get those assets, and they take on the risk for a small fee. You swap through them, you get kind of like your instant access to that liquidity on, the Ethereum main chain or Polygon, whatever, and they get kind of like the fee and the tokens when they kind of like when they come to market there. So you can kind of like I guess like read this help desk article here from Hop.Exchange or HopProtocol, sorry, of how to provide liquidity and become like a liquidity provider for this sort of stuff, which obviously the more liquidity there is, the better the bridge is going to be, the more that we can kind of bridge in and out with low slippage and stuff like that. But yeah, this is really, really cool to see and great to see that, I'm not just talking about it saying coming soon all the time. It's actually here and very timely. And, they're going to support Arbitrum. And I mean, they're going to support everything, right? Like all these bridges, they lose nothing by supporting everything. They gain a lot, right? They have to support everything. That's their kind of like their main use case here. So we won't have to worry about kind of like the 7-day withdrawal kind of like periods anymore. It's just going to be very, very seamless and smooth through these bridges. All right, last thing to talk about was something that I missed the other day. Barnbridge announced their Smart Alpha product. Now, this product is a little complex for people who aren't kind of like familiar with it. I'm not going to explain it now because I'll probably butcher the explanation. You can go check it out in this blog post here. I'll link this in the YouTube description for you to kind of get your head around what this is. But essentially, they explained it here, and the TLDR is that Smart Alpha, I mean, I'll just read this paragraph out here. So what Smart Alpha does is it allows users to calibrate their exposure to the performance of an underlying asset. So say you want exposure to like ETH, right? And you want to calibrate that exposure to have less risk or more risk. And it does this by regularly redistributing an aggregated pool of the underlying asset between two groups of users, a senior side and a junior side. When the price of ETH goes up, for example, seniors give up some of their assets to the juniors and vice versa. And put another way, junior users are buying asset price risk off of senior users, guaranteeing them price protection up to a certain threshold in exchange for greater upside potential. So this is kind of like those, you might see more advanced traders talking about this on kind of like Twitter and maybe in podcasts and stuff like that. But these are like exotic financial products that these people use to hedge their exposure, right? Like you can use options, you can use other types of derivatives. You can obviously now use like the Smart Alpha product, which is actually going live very soon. I think they said here that it's going live. Where do they say it? They said it somewhere anyway. But it's going live kind of quite soon here. But essentially you can use this kind of like hedge your exposure to ETH as an example. We're turning out like an asset here. So if you're a junior user, you can buy this price risk off of senior users and guarantee them a price protection up to a certain threshold. And then in exchange for that price protection for them, you get greater upside potential. So yeah, and the outcome is a two-sided marketplace for asset price risk, generalizable to any compatible ERC20 token today. This is actually like a pretty big deal and a pretty big product, especially for people who, I guess like traders, funds, and people who specialize in this kind of like asset risk exposure and I guess diversifying their risk and wanting to kind of like manage that. Maybe it's not going to be used by everyday traders like me or you, or maybe it is because these products typically weren't very easy to use before, but now with Barnbridge's solution, they become easier to use. And I think at the end of the day, making it really easy for people to understand as well is a big kind of piece of the puzzle here. But if you do want to understand it, I suggest giving this blog post a read. It does a much better job of explaining it than I can. And then definitely go kind of like check out the Barnbridge protocol in general. It's a really great tool. I think it's just working to democratize, I guess, these advanced or exotic financial products and letting users like me and you who may not have kind of like the, I guess, the expertise in this sort of stuff to get involved with it in a really easy and friendly way. So, I mean, I'm always down for promoting these tools because that's exactly what we're trying to do with DeFi. I know DeFi's taken a backseat to NFTs recently, but people are still chugging along here. They're still building, and DeFi is gonna, I mean, I still think DeFi is going to be bigger than anything. It's just going to take a little while to get there because right now DeFi seems like unsexy compared to NFTs, but that's okay. You know, DeFi, you know, people are still building. It's going to have its a day in the sun again. And products like Barnbridge's Smart Alpha are definitely going to be one of those products that I see a lot of people using once, I guess, DeFi comes back into fashion. But even so, like, a lot of people are going to be using this anyway, as long as they know about it. At the end of the day, like, as long as you're aware of it, you can kind of use it if it appeals to you. So that's why I kind of highlight this stuff on the refill all the time. But anyway, I think that's it for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give that video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.